Day trading stop losses. Where should you place your stop once you enter a trade? It's easy to think about how much profit you're going to make from the trade that you entered, but it's hard to think about where should you stop out at if it turns into a loss. We're going to break down the idea of a stop, where you should be placing it, about how I've been battling the stop loss run, what I want to do here in the future, and how I'm going to improve my day trading by adjusting my stops. We're going to break it all down right here in this video, so make sure you guys stay tuned.
Yeah.
What's going on, guys? Patrick here. Today, we're going to be breaking down the stop loss, the day trading price action stop. Where do I want to be placing my stop at? What is the idea of the stop? You know, if I enter a trade and I have my profit target, well, where do I put my stop at? How do I know where to stop out at if the trade goes against me? Should I even use a stop loss? That's also a question, right? Or should I just enter and then just close my eyes and hope for the best? If you guys want to learn more about day trading and you haven't already hit that subscribe button, you know what to do. Hit that subscribe button. Help me out by hitting the like button as well. And leave a comment down below. What video topic should I cover next? First off, it's so easy to enter a trade and just focus on like, okay, how much profit am I going to make, right? I'm going to make so much money on this trade. The hard part is to think about like, what if this trade doesn't work out? What if it goes against us? What do we do? Where do I place my stop at? And more and more experience that I'm getting trading futures, trading stocks, and things like that, I've learned that the stop loss is almost more important than anything. You know, you can enter a trade, you can look for the profit, all these things. But if you don't have a good plan, a good strategy for where to place your stop at, you're probably not going to end up, capitalizing on the bigger moves. You're not going to end up getting out of the trade when you're supposed to. You're not going to really do what you need to do to be profitable as a trader. So number one rule that I need to really focus on, I think you guys probably want to focus on as well, is if I see a setup, the first thing that I should be thinking about is not how much profit, where my profit target's going to be. The first thing that I should be focused on is where can I place my stop to validate my risk to reward, right? If I'm going to enter here, let's say I'm going to enter right here for this break above this level on, we had this consolidation. I'm going to look for this break out of this range. And we are kind of jumping, and we are looking for that break to the upside. We took this trade. We made money on it live on YouTube. So if you guys haven't tuned in, 9:30 a.m., tune in. But looking here at this range, we got a pretty big range. It's about a 10 handle range. So the issue here is, number one, if I'm going to be entering this trade, let's say I'm looking for a break above this 40 level. This is the 3-minute chart. So you can see on the 1-minute chart, we bounced off the VWAP there. I can see that VWAP kind of acting as support multiple times. That VWAP acting as support right here. Terrible arrow. But my entry's here, right, for that break. So let's go back to the 3-minute chart. We know that that candle opened on the 3-minute chart and then held that 32 level. And we were looking for that push over the 40s there. So looking at this setup, we know that that VWAP has been acting as support. If I'm going to be entering this trade, I think really, what's my risk to reward? I'm looking for a move up to the 50s or higher. So we're entering there at the 39, 40 levels. Handle move up, $10 move up there on that contract. And then my downside really is, I would say the VWAP area there. But then really you could think about it as the bottom of this candle. I would say where that candle opened at, if I'm going to be getting long here for the push above that breakout, well, if this doesn't push higher and it pulls back, well, then I'm getting stopped out at 35. So we're going to risk, 5 handles, terrible drawing, but 5 handles for a 10 handle profit. So my stop's going to be at the bottom of this candle there, kind of in this VWAP area, and that will be my overall stop. So entering that trade, I'm like, okay, if this pushes up, that 3-minute candle, it pushes up there. We have that price action below that range high. So I'm thinking, okay, I can risk 5 for this move up, thinking we're going to move up to the 50s or higher. And we actually got about a 10 handle move, a little bit higher actually. So that was a pretty simple setup here. You got the breakout. Where's my stop at? It's at the low of that 3-minute candle where we opened at. So we opened at that low. We push up. We get the breakout. I'm now placing my stop to the bottom of that candle. We get the move higher, and then my target's up there. So that easy kind of setup. We have these smaller trends that are kind of trending lower. We bounce off the EMAs there. We then push up. Where's my stop at here? If we're getting this break to the upside, where's my stop going to be? My stop's going to be the low of this candle, pretty much off that as EMAs. So we can look, it's 45, the bottom of that candle, the breakout's 50. So again, we risk our 5 handles for a 10 handle move up. We get a push all the way up there to 64s. Again, good overall risk to reward. We're risking 5 handles for a 10 handle move up. $10 move, handles $1 on the contracts. Let's focus on a couple things as well. What do we have going on? You can see down here the MACD crossed earlier on that move up. So the MACD is still bullish. We're pushing higher. Then we get a MACD cross here and we start to trend lower. So where's our next setup on this after we just established this overall move? We made money. So that's 2 trades with a 5 handle stop at the low of those moves or the low of those candles. That's a 5 handle move. So we're basically looking at this like if this is my entry candle right here, this is my entry candle. We broke out of that downward trend. My stop's right there. So my stop really is at the previous low of the candle that's pushing up through that breakout. You can see this candle pushed up. We got the wick on the bottom and then broke to the upside. So that's pretty good. 5 to 10. Again, great trade. Market moved up to the 64s, starts to pull back. Guess what happens? We get the cross on the MACD down there. Once we get that cross on the MACD, it's questionable. Do we want to be long here? Probably not. Same idea. I think, you just draw these lines on the chart looking for these breakouts on the 3-minute chart. We talked about this strategy before. What do we got going on with the MACD? MACD, no cross, no cross. We finally get the MACD cross once again over here. All right, we get that push back up. If I'm going to be entering my trade, where do I place my stop loss? We got the breakout. We're getting back above the EMAs. We got the MACD cross here. We got the VWAP down there supporting us. We got a lot of stuff looking bullish. Where's my breakout candle? My breakout candle is right here. You can see that 3-minute candle, nice and bullish, pushing the upside. Let's say worst case scenario, you entered at the top of this candle at the 53s. Where's my stop at? I would say down here at the 47 area, maybe, kind of in this area here. So we're going to risk, we'll say 48s, we're going to risk off there. So we're entering here at the 53s. It's about a 5 handle move. Again, 5 handles to the downside for our stop. What's our target to the upside? We always kind of want that 2 to 1 at least. Well, here's a move all the way up to the 70s. From the 53s, you get a 10 handle move to the 63s. And then to the 70s, you get about, 15, 16 handle move there. So a 15 handle move to the upside. Beautiful trade. Again, let's just be realistic here. You're not always going to enter perfectly. You're not always going to be able to identify those trends. But I think the real focus here is not so much like, oh, wow, look like, how simple it is in hindsight. But the real focus here is if I'm going to enter a trade, if I'm going to look for a move up, what is my stop? What's my risk before thinking about what's my reward? If my risk doesn't justify the reward, well, then it's not a good trade. If I can't easily identify my risk, well, then it's not a good trade, right? Like it's not a good setup if I can't look at it and be like, wow, like where do I place my stop at? If I don't know where to place my stop, if I can't clearly see where to place my stop, well, then it's not a good trade, right? Like it's a terrible trade at that point. Here, we got a MACD cross finally, and we want to get short. Where's my stop loss at? Again, you just look at it like this. That little trend breaking. Where's my stop at? It's right there. I'm going to enter, let's say I'm going to enter here at the 73s. My stop's 77. So we're going to risk 4 or 5 handles. Again, I would say 5 handles there. Where's my profit target? Again, we're looking for 10 handles. Do we get 10 handles to the downside? The move to the downside here was 62 on that move down. So, from the 72s to the 62s, that's your 10 handle move. Number one, I want to focus on, my stop loss, placing my stop, and then also making sure that I'm maximizing my profits. We talked about this before. If I'm taking profit, if I take profit at 3 handles, if I take profit at 4 handles, and then this pushes back up, well, my risk to reward is terrible at that point. I'm now risking more than I'm making. And I've done this. Like I'm 100%, I'm taking full credit the idea that I've done this so many times where I end up getting into a good trade. I take profit early. the trade ends up going all the way in the direction that I wanted to do. I end up then chasing it. I then get stopped out. So many emotions come from basically, number one, maybe missing out on a trade, then having FOMO and then seeing it go in your direction. But the thing is, if the trade doesn't invalidate, like if you're getting short here at the 72s and we don't hit our stop loss, just because it got a little pushback up, just because you're in the red for a minute, doesn't invalidate that trade. The trade is we're getting the break to the downside, our stop's there for 5 handles. And that's all we got to do. If we do this every trade, every single trade we take, we follow the same exact strategy, the same idea, and we have let's say you have a 70%, an 80% win ratio, even a 60%. I mean, hell, I think really if you have a 50% win ratio, you can still be very profitable with this overall risk to reward. Because you've also got to remember here as well is, okay, you got that move down 10 handles. Well, earlier, we got a 15 handle move up. So on this, it's like, okay, we entered here and we get let's say we get a first move up, we take some profit. We have our first profit target's 10 handles. So from the 52s, we push up here 62s. Perfect. We take profit there. Once we get that push up 10 handles, let's move our stop basically to the low of that last pivot. And that last pivot would have been kind of basically where our entry is. So we can, at that point, move our stop loss to break even. And then we would like to see a push up. And then once we get that push up, well, then we're going to move our stop loss to the bottom of these candles. We have the EMAs there, a lot of things going on. We get a push up to the 67s. Maybe we take a little bit more profit off there. That's 17 handles at that point. Because the market's moving in a wave. The market's... So if we enter here, as we push up, okay, we pull back. Okay, at that point, now we can kind of move our stop up. We take our profit here. Again, we have our profit target. We took our profit. This pulls back. We can then see that next pivot. We then move our stop there. We get that push up there. We take profit up here again. So really just being able to kind of think about 5 handles, 5 handles, 10 handles, 5 handles, 10 handles. Risk to reward 1 to 2. And the nice thing about this strategy, the nice thing about this overall idea, is it can always go higher. Obviously, it can also go lower. But in general, we're just looking for very simple setups. I think this is almost like too easy sometimes. And I have problems with this. And I'm like, Patrick, just wait for the breakout, right? Like just wait. You got 1, 2, 3, 4 touches of this downward trend. The MACD's bearish. There's no reason for me to get long here. We see, okay, now the MACD's crossing. Momentum's changing. We get that push up. Now I'm entering. It's just that simple, really. Like, it's easy, in the moment to like overthink it, to start over trading and get chopped up. Like I 100%, I will 100% take credit for doing that. Like I will not sit here and tell you guys like I don't ever do that. I'm the best trader in the world. Like I will take full credit to the fact that, hey, I battle with this simple idea. It's simple, right? It's a simple idea, but I also battle with it. I'm sure you battle with it. But again, it's like there's no reason to get long until we get a nice break out of this trend to the upside. Like there's just literally no reason. If you're going to enter a trade, you should not only be focused on your profit. You should be focused on making sure that your stop loss is in line with your overall risk to reward. If I'm entering a trade looking for a 10 handle move up, well, then I need a stop loss around 5 handles to the downside. This would also help you with your entries. If I see a breakout to the upside, but my stop loss would be, 10 handles, it's too much. So I'm like, okay, I missed out maybe on my entry. I need to wait for a pullback. I can then wait for a pullback. That's one way to look at this. I can wait for a pullback here. I can wait for a pullback. Let's say my risk is too much. Like let's say I want to get in here at the 52s. I don't want to risk 7 handles to the downside on here. Let's just say like this candle was the low. And I don't want to risk 7 handles. I'm like, okay, that's fine. We know, number one, the market is now pushing up. We're breaking that trend. So what I can do here is wait for that next pullback and then justify my stop loss. So let's say we get this pullback here at the 52s. Right here, we got this pullback. We got the EMAs supporting in there. We have the MACD cross. You can 100% just do it this way as well. So I want to enter here at the 52s. Where's my stop? My stop's going to be like right down here at the 47s in this area, even kind of below the 50s. So at this point, like if you're entering here, you're actually minimizing your stop there. So you're only risking, 2 or 3 handles to the downside. So let's say you're risking 3. Well, all you need is a move 6 handles to the upside to justify that overall trade. So from the 53, so let's just say you got in the 53s there. You're risking off the 50s. You know, where's that move up? We get a move up to 62s. Beautiful. That's even more. That's 9 handles to the upside. It's not always that you have to get in right at the breakout. I mean, you can totally do this where you wait for the breakout, you wait for the pullback, you get in. You're minimizing your risk. You're maximizing your reward. Because now you're only risking 3, you're making 9. And that's really good overall risk to reward, really good profit on only risking 3. That's a 3-to-1 risk to reward. So think about that. Like I thought about, hey, I'm looking for a 2-to-1 and I'm trying to enter for this breakout, but really, I get this push up, we get that pullback after we kind of pushed out of that, we got above the EMAs, we had the MACD, everything's lining up for a move higher. Again, guys, like you really got to focus also on the price action. We want to see these moves up. We want to see strength. We want to see volume. We want to see action. We want to see key levels breaking, things like that. It's not just like simple, like, okay, this is just like draw a line, it's going to happen. But again, the big focus here is where do you place your stop at to justify your overall trade? If you can't justify the trade based on your stop, if your stop's going to be 10 handles, 20 handles to the downside, well, then it's not a good trade, especially if you're only looking to get 10 handles to the upside. You cannot risk 20 to make 10. That's not a good trading strategy. And I think, looking at the charts here, something for me to really focus on next week is to really focus on like, hey, I'm not just going to enter a trade and just put my stop loss anywhere. I'm going to enter a trade only when I can see like, hey, this is where I want to put my stop at. I want to put my stop to the bottom of that last swing. I want to put my stop to the bottom of that last candle because I can see that candle pushed off support, pushed off the VWAP, whatever it is. It's justifying that candle is going to hold, and then we're going to get that move higher, right? Like that's really my focus here. It's focusing on overall, if I'm going to be trading these breakouts, where is my stop loss going to be? That's simple. Instead of thinking about how much profit I'm going to make, I'm thinking about where am I going to put my stop at? Where does my stop justify the move? Where does my stop justify the risk? So there it is. If you guys haven't already, hit that like button, subscribe button. Let me know in the comments below what topics should I cover next. We'll see you guys live right here on YouTube, 9:30 a.m. Eastern. I'll talk to you guys later